Hey guys, it's kind of early this morning. It's 6:25 a.m. But I wanted to do just a short video on what caused the January run up, which I'm on TradingView right now. What caused this run up that we had in AMC in January? And we're actually there's a lot of talk that we're actually this we're in what's called a fractal right now. I mean, the way that these charts trade, you can break them down into zones called fractals, and it's how the supercomputer that we're kind of trading against right now is trading. It's the way that the market makers make up the market, and the chart that you see is a conglomerate of thousands of different algorithms trading, sometimes trading against each other, trading with each other, and a lot of it's based off of a Fibonacci retracement levels when they either buy or sell. So these that part of the technical part of the market is very interesting to study because it's not like you can like exactly copy paste a part from years ago and then copy paste it now, because it's going to be slightly different because the environments are slightly different, like the volume might be slightly different on that particular day. But one thing that's interesting is I thought, to me, retail, unless they're using sophisticated algorithms to trade with and they have millions of dollars to trade with, retail can only buy at a, like they can, like this is a 1 day chart, but they can buy at a second. It's really a millisecond. So you place an order, and on that millisecond in time that the order is placed, it's sent to the broker, sent to the wholesaler, who aggregates those orders, and then can send those orders in blocks, and trade and transact those blocks. And then the national best bid and offer picks up all of those different bids and offers, or bids and ask prices out of those different order books. And there's lots of different order books. And the reason I'm telling you that is retail buys at a point in time. Okay, so it's not like, unless somehow retail buys is just buying hard at 10 a.m., which they could do, or at 9:30 a.m. right at the gate. They could do that. That's possible, but it doesn't happen that often. But what can do that, and what can drive these price movements that you see here, is there's buying pressure in here, and then what to me actually caused this incredible price movement here and eventually led to this squeeze. This would have gone up much higher without the buy button being taken away. Um, so retail got robbed here. I mean, I'm with I'm in that seat because I had shares in this 440 area. Um, I actually had a an account with one of the brokers that shut off buying at that time. But what is it that led up to these? Because this is January 21 this year. This is when AMC first ran up from this $2 level. And I apologize right now if you guys can't see this if you're on a mobile device or something. Um, but in January 15th, it ran up from 232 on a Friday, and then the next Monday it comes in, and we're at 289, and then it ends up, it ends up at a much higher price. We're almost in the threes at that point. So that's a huge price increase to go from $2 to $3 percentage wise. So there's a massive amount of hedging, and that's what I wanted to talk about. Is if you take this area that we were back in January, there's a lot of talk that this is the same fractal, and it very likely is. But with the same buying pressure, it's these gamma squeezes, which is basically you have a price, like say price is at $1, and then on the next Monday it comes in at $2. Well, the whole option chain, the market makers get blown out of the water when you have these giant bumps on a Monday and it stays that way the entire week. It would be one thing if it came in at $1 on Monday and ended at $1, or it ended at 50 cents. But instead we have all these options going in the money week after week, and there's more out of the money options going in the money week after week. And that's what this was. This is about 2 weeks here where we have out of the money options going in the money, and that is what put so much pressure. I'm not saying that retail didn't aid in some of this. Obviously, they did. They had enough effect to mess up the options, but the options are what blew this thing up. It wasn't, um, retail's just straight up buying pressure, consistent day after day, hour after hour, second after second buying pressure. It's the options, and it's those out of the money options that went in the money that caused these little gamma squeezes that eventually squeezed the shorts really bad. And this exact same thing, I'll just talk about. So we'll just go back to like a January. So we have here on a January 19th. Actually, we'll go back. Yeah, January 19th. It comes in at, let's see. Okay, so the open is 279, the high is 320, and then the 22nd of Friday it explodes. So even if the price had just stayed for whatever reason in the $2 range, they might have been okay, but instead on a Friday you have this massive price increase where it closes at $3.44. So if it had closed less than 3, it might have been okay, but now you have a whole nother glob of options that go in, out of the money options that go in the money on a Friday, and that caused these guys some serious pain. So then you see on the 22nd, yeah, you see another price increase. Yeah, it bumps up. Okay, yeah, he has a 4 hour. So yeah, on Friday it explodes. It absolutely explodes. And then you come in on the 25th, which is a Monday, and the price jumps up even higher. Now we're in the $4 range. So now you have the amount of change in percentage of options that these market makers have to hedge for is now insane, because now they're having to go out in the open market, and guess what day the stock blew up? The 27th. Guess what day that is? That's a Wednesday. That's when they have that's a gamma squeeze from these options going into the money. And that's this cascading effect of every week after week that puts so much pressure on these short sellers, is those gamma squeezes. And I wanted to just show you guys we are in that same zone, because guess what December 17th was? And I'll go in and pull that up. December 17th was a Friday, okay? And here we are Wednesday morning, and we've had this consistent price increase. And we've also had Ortex issue 2 different classes of short squeeze, I guess, possibilities, or it's possible that we would see. They call it a short squeeze indicator, but some of it is, I don't know how they build off of, like they said, it's just a recent price increase in AMC stock. Well, guess what? So here's December 14th. This is a Tuesday. But the price, so the price comes in on Monday, yeah, December 13th, and it's dead. It's down here in the ditch. Yeah, high at 23.74. Tuesday it comes in high of 24.97 and a low of $20.86. That's when we open down there in the basement. Okay? And then it comes back up. 16th. December. Oh, here's the end of the week. More options in the money. This is what's going to squeeze these short sellers out and cause them major heartaches are these gamma squeezes. So we have a Tuesday where that we have a major price increase and a Friday. So now we've got today where they're going to have to start figuring out what they're going to do with all these options that they have to hedge for. They have to delta hedge. Basically, an options contract has a delta factor on it, which is it's really the number of shares that you can control in that option. And out of the money options have way lower delta than in the money options. And a deep in the money option will have a very high delta. The out of the money options might have like a 0.19 or 0.20 delta, but as soon as they get closer to the money, that delta increases to 0.5 or 0.6. Basically, the market makers write naked calls, and so as those calls, the strike prices, the share price in the stock rises, those out of the money options get closer to the money. They have to buy more shares in the open market to hedge for those calls in case they get called away. So, here we are today. We've had these price increases. I am very interested in what today is going to bring because of the options that we're dealing with these gamma squeezes. And I think that's a lot of these fractals that we're seeing now, and based off of here and early in January, this is those gamma squeezes. I think we had some gamma squeezes. Let's just look real quick. In May, I think even May presented a major May 13th. Yeah, 13th. Yep. Yeah, that's a huge problem because you come in. Let's go to the 10th. Okay, so you have a certain options chain. You come in on Monday, and then on Thursday you have this giant pump. Huge pump on Thursday, May 13th, and it stays that way on the 14th, which is a Friday. So now you come in on the 17th, Monday, the price is still high. Okay, they were able to beat it down a little bit on May 21st, a Friday, but then you come in on the 24th. Yeah, these are still. I'm not sure it correlates quite the same. It might. I'll have to. I haven't dug into this area for May as well, but we're definitely in that same time zone for these options. Those little gamma squeezes that put major pressure on the shorts. I'm not saying that retail has no effect on the price. I'm saying that the options are what really caused them a lot of problems. Especially if we get another price jump up here to this $35 level due to options, then you get another gamma squeeze and another, and then eventually you get the short squeeze because they're so buried because of those options going from out of the money to in the money. Either way, guys, I've been frustrated. I've lost some money and been kind of down, but I was like, wait, I just got to give it time because these options are causing them some serious problems, and they're really not able to. They're just not shorting the stock anymore. They're not able to beat up to beat down against the gamma. I really think that a lot of their whatever they did in shorting, the computer just shorted all the way down here, and then it'll just switch and go long. I think that's just how the algorithm's just going to run. And that's kind of, if you make it through all this crap and you hold your stuff, then eventually you get this rise, and that's the same way that it's been trading back in here and in here. Either way, it's just my opinion. This is not financial advice. If you guys have any questions, please fill out a comment below. I really wanted to not do too much technical analysis. I'm not really super great at that, but I do feel like it's super important to realize what caused these price movements in these periods of time, which is to me is time and date. What happened, when it happened, what was going on. I have a background in IT and used to do a lot of digging into pretty, pretty, very technical hardware problems. And if we could find logs and then find out a time and date down to the second of what happened, why it happened, that was always super important. So that's kind of what I'm doing here is a time and date analysis for you guys, and I hope this was helpful. Thanks.